consolidated bank of 600 million. In August 2001, the then chief executive made a guarantee on behalf of Eurobank to enable consolidated bank to use the fixed deposit amount as security. When Eurobank defaulted payment, Consolidated Bank was unable to recover the payment and therefore offset 49.5 million from the total amount of 600 million. And the attached appendix is Appendix E. This matter was handled by the Inspectorate of State Corporations, which was of the view that the fund had no capacity to provide a guarantee for a loan to a private bank. The Inspectorate of State Corporation further guided that Consolidated Bank should pay back the amount of 49.5 million. Attached is the report from the Inspector General within the same appendix. As guided earlier by the Auditor General's Office, the statement as regards the matter is valid for investment in securities. So for this case, this matter was presented to the PIC committee, where it recommended that in its 21st report, that the query should be excluded from the subsequent reports of the AG, provided that the management makes full disclosure of this unresolved matter in its financial statement as guided by the International Accounting Standards. The current status: management has made full disclosure of this matter in its 2020-2021 financial statements as required by the standards and as recommended by the PSC committee report. And the annexure is Appendix E with the extract from the 19th and 21st PIC reports and the letter from ESCC. Thank you.
Next, 5.0.
Thank you, Chair. 5.0, trade and other receivables. 5.1, long outstanding return to drawer RD checks. The statement of financial position reflects a balance of Kenya shillings 7,781,204,639 shillings under trade and other receivables, which, as disclosed in Note 29 to the financial statement, includes RD checks amounting to Kenya shillings 18,061,171 shillings, which had been outstanding for more than 6 months and were therefore still. Consequently, the recoverability of return to draw checks balance of Kenya shillings 18,061,171 shillings as at 30th June 2020 could not be confirmed. Thank you, Chair.
Response?
Thank you, Chair. The management response is on page 19. Regarding the return to drawer checks totaling 18,061,170, some of these are associated with companies that are closed and the debts exceed 6 years, rendering them outside the scope of Action Act in debt collection. Subsequently, a provision for doubtful debt has been established in the financial statements. As per the debt management clause 4.3.4.1, 50% of the outstanding contributions aged between 12 and 24 months shall be included in the provision, except in cases where adhere to payment plans are in place. Clause 4.3.4.2 specifies that debts older than 24 months require 100% of the overdue amount to be included in the provision, unless adhere to payment plans are in place. Furthermore, Clause 4.3.5 on bad debts states that debts exceeding 5 years be classified as bad debts, subject to potential write-off by the Board of Management. The fund intends to pursue the board approval for the write-off as these debts are deemed to be uncollectible. In addition, the management has implemented a system module that automatically reverses payments from employers when their checks bounce, prompting immediate pursuit of the unclaimed amount for that specific month. Consequently, the issue of refer to drawer checks has been eliminated. NHIF collection banks, that is KCB, and cooperative banks now only accept their own drawn checks, which are verified for account status before acceptance. further reducing the instances of the refer-to-drawer checks. Moreover, the CEO's office established a task force on 22nd of June 2022, tasked with reviewing debt and providing management with recommendations for appropriate actions concerning each debt category within the organization. The task force anticipates completing its mandate next month, that is May 2023, at which point it will present a report for management review, discussion, and subsequent approval by the Board of Management. The reference is reference F on appointing the committee and the terms of reference for the committee.
Thank you. 5.2.
Thank you, Chair. 5.2, salary debtors. Included in trade and other receivables balance are salary debtors, Kenya shillings 5,018,843 shillings, which include an amount of 4,414,750 relating to an insurance claim for motor vehicle registration number KCK 549U, which was involved in an accident on 27th April 2018. As at the time of the audit, April 2021, the claim had not been paid. Consequently, the recovery rate of salary debtors balance of Kenya shillings 5,018,843 as at 30th June 2020 could not be confirmed. Thank you, Chair.
Response.
Thank you, Chair. The management response on sundry debtors is on page 20. As a background, motor vehicle number KCK 509U was involved in an accident on 27th of April 2018, which was reported to our then insurer Amaco. The accident was assessed and the vehicle was declared a write-off. Evaluation was done and a discharge voucher of 4,414,750 was issued by Amaco, and this is in Appendix G. The discharge was signed and returned on 12th of June 2019. The claim has, however, not been settled by the insurers, despite numerous engagements via emails and letters as provided. The most recent communication to the client was done in 2021. Channel insurance brokers who are providing insurance brokerage services at the time of the accident tried to engage the insurer on various occasions, including the regulator as indicated to us via an email dated March 2021. The current status: the fund, having received a discharge voucher from Amaco, signaling amount to be received from the insurer in regard to compensation for the motor vehicle, signed, stamped, and returned the discharge voucher on 12th of June 2019 for the payment to be processed and wired. The insurance company has since not made payment despite numerous follow-ups. To this, the fund made further engagements with the regulator in pursuit of the debt to ensure that it is fully recovered. The fund has shared policy details with the regulator and awaits further action. In the meantime, to avoid recurrence of a similar scenario, the management has caused all policy documents to include timelines to guide claims and compensation processes in case of incidents of motor vehicles. Thank you, Chair.
Thank you, colleagues. I wish to open the floor. And what has got my eye as the chair is just to look at maybe one document, which I invite you colleagues to look at, Appendix G. When you look at the response, Appendix G